Welcome back, traders and investors. This is going to be the third guest. It is the 920 session, and I have with me Kevin McPartland, Principal of Market Structure and Technology at Greenwich Associates. Kevin, welcome to the show.
Hey, good morning. How are you?
Oh, I'm doing fantastic. After that nice little flash up in SPY yesterday, thanks to what I would assume was HFT, but it seemed to be some sort of market structure issue. Following that,
Yes.
I'm doing pretty darn well. So,
Great.
if you wouldn't mind getting into it, I did notice yesterday that Jeff Sprecher, the CEO of ICE, is going to be offering some new proposals to deal with the market. So, this proposal kind of goes around maker-taker. I was wondering if you could explain that for us in simple terms about how the maker-taker system works and what it's all about.
Yeah, sure. So that's a great place to start. I mean, the simple idea of maker taker is that you are, you're charging those who are sort of taking liquidity out of the order book, and you are providing rebates to those who are putting liquidity into the order book. And despite what Michael Lewis might think, I think the original, reason maker taker was implemented was, as a lot of these new ECNs and exchanges were trying to get market share, 10, 15 years ago, this was a great way for them to incent the various trading desks to try out these at the time new venues. As opposed to the incumbent, so it really was a sort of a competitive play to get more liquidity onto the system, and then ultimately create more liquidity for the end investor. With that description behind us, what I was most excited about, and I think Jeff Sprecher, who's been sort of talking about reforming the equities markets at least since he bought NYSE, and probably longer than that. It was great to see him put his money where his mouth is, right? Sort of proposing what could be seen as a pretty radical change to the market structure of equities, how things have worked for the last 10 years. Whether or not it's the right or wrong choice, I think the jury's still out on that. I think my decision's probably still a little bit out on that, but I do appreciate that he sort of is quite literally putting his money where his mouth is on these issues.
Yeah, it's nice to see some changes finally coming in. I mean, I've always kind of been on the other side of HFT since the early days before it was really kind of out there, just because of our lack of information and really trying to understand the dynamics of the market. But I do understand that with the maker taker, it was difficult when some of these, alternative trading systems and these electronic networks were coming up. It was difficult trying to pull, volume from the bigger exchanges. It just seems, that there's some people out there right now that are kind of viewing this as something that's kind of morphed from trying to help these other exchanges to get volume to now it's a way to manipulate retail flow. Can you speak at all to anything to
Yeah.
this effect? I mean, because it seems like now with the ICE talk, NYSE came out earlier this week with an announcement. I won't get into it to confuse everybody, but NYSE came out basically offering free trading for wholesale trade outlets that give order flow over to NYSE. They're going to give you free trades on the midpoint. So it seems like there's kind of a push now to either help retail or entice retail people to come back into the market. Do you see anything to that? Do you think that there's something that goes to that effect, or you just think these exchanges are just saying, hey, we got to change things up and keep it fresh, and this is just what we're going to do?
Yeah, I mean, I think let's not kid ourselves. Let's not think that these proposals are altruistic and 100% focused on creating a better market structure. Let's remember this is a very competitive landscape, and NYSE probably sort of lost the most, if you will, over the last 15 years, where they really had nearly a monopoly, within recent memory, right? So it's great that he's sort of trying to revitalize the exchange. It's still obviously a huge player and one of the biggest in the U.S. equities market, so we shouldn't underestimate that. But yeah, I mean, I don't think this is sort of an altruistic, let's make the world a better place. I think this is let's figure out how to get market share back onto the exchange with a little bit of let's make the world a better place. Getting retail in the market is certainly an important thing. It would be great to get more folks trading more again and get everybody reinvested. I think that sort of rising tide should lift all boats in that regard. But the way some of the proposals are outlined, and the major support of the Trade Act rule is going to would encourage more use of exchanges and less use of the other venues, and what that assumes is that those other venues are ultimately bad for price discovery and for the retail investor, which I'm not sure is the case, right? We have to remember that a lot of our sort of retirement accounts, if you will, are managed by institutional investors through whether it be mutual funds or ETFs, and those trades are then the ones that go through some of these the ATS or the dark pools, if you will, in search of, a better price or limited information leakage out into the market. So it's not a just something about the big guys, sort of trading with each other. Our money is going through there too, and we want the institutions that are managing our money to have access to the best pricing and liquidity.
Oh, entirely. And that's kind of something I want to get back into really quick with Sprecher was the decision now to not they're going to ban the different fees and rebates for taking and providing liquidity in the market, and it looks like it's going to be one flat rate now. Is this correct? And how do you think that that's? I like that they're kind of keeping the ability for exchanges to incentivize order flow.
Yep.
I believe that that's part of the system. The only thing that seems a little, that kind of scared me in the beginning, perhaps here, is that we did have this imbalance on the fee structure for trading, and it seems like maybe that kind of drives some of the fundamental issues with trying to allocate resources to different parts of the economy that require it. Do you think? Does this impact of HFT? Does it really have a material impact on the rest of the economy when it comes to setting prices?
It's possible, right? I mean, it definitely changes the economics of trading, trading on the exchange, and with, as such, anybody who's doing automated, trading strategies and profiting on the rebates is going to need to adjust their, algorithms, and that's, you have to remember that's not just, the guys in Chicago, the proprietary trading firms, but the broker algos as well, are sort of looking to, as they're trying to even execute orders for clients, they're trying to figure out how they can do that at the best price, and that includes, the ability to take rebates where they can. What I think the most about it, and I think we probably talked about it a couple of months ago on the show. If it was in an ideal world, I think what we need to do is shut the markets down for 2-3 months, lock the SEC in a room, and tell them to start from scratch and come up with something new that takes into account everything we know today, the technology, the different players in the market, the different models that are out there, and create a new set of rules that aren't based on rules set almost 100 years ago. Obviously that's crazy and that's never going to happen. So what I like here is that I like the simplicity of it, right? It's almost like we're trying to say, okay, let's step back and make this simple, and here's the one simple price, and that's it. Take it or leave it. But it seems like the only way this could work is if you do get buy-in from the majority of the others in the marketplace, because it is going to. I would think it would definitely pull some liquidity away, at least in the short term. But we will see. The other part of the proposal is that he's sort of suggesting a pilot, which I like that approach. The SEC is good at that. Like, let's try this out. Let's see how it works. Let's look at the data. Let's let the academics and the analysts dig into it, and we can decide if this is the right thing for the market over the long term. So we will see.
Yeah, hopefully some good's gonna come out of it. I've always been somebody who's been against the HFT, coming with rolling with the Haim Bodak crew and this group of individuals over here. But it seems I said in the beginning that it seemed like HFT was kind of going through a hiccup. A lot of these problems did seem maybe potentially purposeful in order to hurt retail and to help some of these other bigger firms, the consortiums that own the ECNs. But it seems like HFT's kind of getting out of the hiccups now. They've been able to update the infrastructure at the exchanges. They've been able to efficiently increase their piping capabilities, from location to location, with the new fibers they've been laying, redesigning their systems to run a lot more efficiently. I have noticed we have, less of these flash crashes at any given, moment of the day. Some of the time I would think when it happened back in the day, it was perhaps updates coming from dark pools to the SIP. But HFT's really kind of helped people to take a better look at the infrastructure of the market and really how we manage and process all this data, and it's been incredible.
Yeah.
So with that said, I want to ask you what you think about the new exchange over at ICE, or not ICE, IEX, and kind of how this exchange has been coming up in the way that they're going about dealing with microstructure. Do you have any views on that? Is there any updates dealing with IEX that you want to share with us, or perhaps want to talk to? Any increased volume?
Sure, yeah. I mean, we've been lucky enough to sit down with those guys a couple of times. They're, it's a really, really smart bunch. I sort of walk away feeling like it's not, their views are not as polarizing as might have been portrayed in the book. These are smart guys that understand the market structure, and I think it's less of a crusade and more of a business initiative, right? They think, hey, we think we've got a better way to do this that'll that the investors will like and the dealers will be able to work with, and let's give it a shot and see if we can and make a go of it. I could probably argue for and against what they're doing, but I take the easy road and say, you know what, we're going to find out, right? Natural market forces are going to tell us whether or not the investors like the model. If they do, they're going to continue to pick up market share, and if then it's going to linger around the 1 or 2% market share spot for as long as they can hold on. So the devil will be in the in the numbers on that one, right? We'll know for sure. We'll know for sure what the market wants. I always have wondered, we know there's some inefficiencies in the market. We know there's some bad apples out there. The market structure is certainly more complicated than it needs to be. But are the end investors, are the major asset managers, are they really so upset? Do they really feel like they're not getting the service they want or the prices they want, or the liquidity that they need over time? I'm not always convinced that they're so upset as is often portrayed. But again, time will tell. They will. They'll put the I not to use the expression too much in 1 10-minute interview, but they will also put their money where their mouth is and send flow where they feel like they're going to get the best price for their investors.
When you're dealing in finance, you got to put your money where your mouth is, Kevin, and that's just the way it is around here. And that's kind of been my experience with people out here. It hasn't been so much like, oh, HFT is getting a better price than I'm getting. When we first came out, when we were trading back in 09, 10 and 11, before this was really on CNBC, before anybody really knew what HFT was, and we were still arguing over the discussion of whether it was HFT or not, whether that was the right way to put it. But, it seems like the regular investor can't actually genuinely get angry because they don't understand the dynamics of the market. Their money's not on the line to the point where they have to stay up late to really understand how their trades are being executed. They don't have the incentive to do that. So I feel like, depending on what side of the discussion introduces those individuals to it, that's kind of the way their mindset's going to go. So, from my end of it, the thing I was always upset about is that there were order types that were being used, and we can't call like direct edge an exchange because it wasn't. That's not the way it was classified back then. But there were these order types that were used that we didn't necessarily know about, and funny stuff was going on without disclosing it to us. And these were order types up until this year after. Bats after Bats bought Direct Edge, and then they made O'Brien step down. Now you had all the exchanges come out and start, trying to reclassify their order types as characteristics. So it seems like, from my view, it's always been a disclosure issue. It's never been that you're faster or you have better access. It's been a disclosure of the way of the rules that you get to play by. Is that the same way you see it too? Do you think it's a rules-based thing? Not so much like you're faster than me, but you're playing by the rules of chess, and I'm stuck with the restrictions of checkers.
I agree. I mean, I'm very much a free markets type person, and let the smartest person in the room win, as long as, like you said, everybody's playing by the rules and everybody knows what the rules are. And this to some level, if we look back, in 20 years, if we look back at it, this is a case of the regulations catching up with the innovation that was going on in the market, right? We were working off rules written 100 years ago for a market that is dramatically changed. It's an understatement to say it's dramatically changed in the last 15, 20 years. And and the regulators are trying to catch up, and it's not easy, right? It's not easy. They just don't have the resources and the money and the people to be on top of this stuff like the market participants are. So it's a tough road, but. Yeah, I mean, I don't think we should demonize a certain, set of players in the marketplace. Let's just try to do our best to police the market and keep everybody on the same, working off the same rules and let the best man win.
Yeah, the polarizing debate was fun in the beginning, and now it's just like let's actually solve the problem now. Now, with this said, do you think with some of the with some of the progress we've made, I don't understand how SEC really uses Midas, its ability to monitor the market, that a program that it bought from TradeWorks, which is an HFT system that sells microwave access and other types of data access. Do you think with some of these changes we've had now, and the fact that regulators are a little bit more in tune to it, but more so participants are, do you think that there is the possibility for another type of May 2010 flash crash to come back again?
There's always going to be the chance for things to go wrong in the market, right? I mean, it's impossible to avoid. You'll be trying to log on to Facebook and you can't get in because Facebook has a server problem, right? And these are some of the biggest, most technology-equipped companies in the world. Technology is imperfect, so there's always a chance for issues, right? It's sort of like you plug a leak on one side and it makes you create a leak on the other. So. the complexity involved in the market means we're always susceptible to something going wrong. I don't think we can ever avoid that. All we can do is try to put as many controls in place as we can and control what we know, right? But it's obviously the sort of the usual you don't know what you don't know, and I think that's always going to be a risk in markets that are as complicated as these are.
So as somebody who's as informed about the market structure and what's going on, do you kind of see any issue with the fact that now we are dealing with systems that are able to respond, price, and act quicker than we can really truly comprehend and understand? I mean, we can't respond quick enough to what these things are doing. These automation systems, we can't respond quick enough. These things are almost living on an entire different level that we can't even tap into right now. Do you see that as being kind of this whole, the machine's going to take over and do all the thinking, where now we're going to have machines that are setting prices for us as opposed to, actual human perception, setting prices? It just seems like this dynamic of automated trading is going to really, potentially change the way that we view the way the market reacts or acts.
Let's remember that people still program the machines, right? And it's happening all around us. And again, I'm sort of a big proponent of innovation. As long as we kind of, we try to keep up with it and let everybody play by the rules. You talk about price setting. I don't know how often you've shopped on Amazon and you look at something and you go back an hour later and the price has actually changed, right? Yep. So there's computer algorithms setting prices on things based on supply and demand, not just in the stock market, but all over the place, right? And again, I guess we can argue about whether that's good or bad, but I think the collective, you can't ignore that. Okay, so let's if you want to argue that I lose a penny on my trade or on my executed price because of the market structure, well, I'm also paying a tenth of the commission that I was 15, 20 years ago. So I feel like I'm that penny almost becomes inconsequential because of the efficiencies that all of it has created in the market. So if I had to argue the other side, have we gotten beyond the point of the equity market, right, to help companies raise capital? Yeah, I think we probably have. But we need people willing to help move those equity stakes around to people who want to take that risk to help the companies grow. And this is the way it works today, right? This is how transactions get done, and it encourages people to come into the market because they feel like they can make money, which in the end should allow corporations to raise capital. It's just unfortunately very complicated and arguably more complicated than it needs to be. But sort of back to our initial conversation, the proposals coming out of ICE and with support from NASDAQ and some of the others to simplify ththings, the simplification, could be a good thing for everybody in the long run.
That's what I'm hoping. I'm going to give them the benefit of the doubt. They've stuck around, and honestly, I'm tired of being like a guy that's kind of against it. I would like to see these guys figure it out and just get the problem solved and get going again. And it's funny. I got to laugh at the irony of it because you were talking about commissions relative to commissions in the past. So it's funny that now we have a system that works on nanoseconds, and in order to really analyze what's happening in these nanoseconds, we need to look at this in a holistic view, relative to, years and decades past, as opposed to just looking at it in the now. And you gotta love that irony in this. So, Kevin, is there anything else you'd like to touch on before we sign off here? This has been a fantastic conversation. I appreciate this.
No. I mean, I had my issues with Flashpoint, but what it did was restart a market structure debate, and I'm very biased given that my whole job is about market structure. But market structure discussions are always good and usually lead to improvements. So I'm glad for that.
Yeah, and it's nice. It's nice that there's mature individuals on both sides of the discussion now, and that we can stop just with the throwing mud at each other. So that's fantastic. I got high hopes for how we're gonna end up turning out here, and we'll see how this goes. Hopefully, ICE will be very successful in their attempts.
Yes, absolutely.
Okay, Kevin, I appreciate you coming on, man. Thank you very much, ladies and gentlemen. We were talking with Kevin McPartland. He was discussing some HFT with us. He's the principal at Market Structure and Technology at Greenwich Associates. Kevin, thank you very much, man. I hope you have a great weekend, and I look forward to talking to you again soon.
Thanks. You as well. Take care.
All right. Thank you.